Hello, everyone from Zinger Nation. This is Justin Roberti. How y'all doing this afternoon? It has been a pretty dreary time of it, hasn't it? There's more bad news over the weekend. Bitcoin taking another dip. You've got regulators in the U.S. saying that this is an opportunity and a time to scrutinize crypto even further. Obviously, algo stabilized stable coins are perhaps not even going to remain a thing, depending on who you listen to. We've got Vitalik Buterin kind of chiming in terms of we should be sticking to our core mission, not necessarily doing all this hedge farming and so forth. It's a huge difference from the heady days of 2021. And that's why, we've seen a lot of people get hurt, and I really hate to see this on Twitter and so forth. People who had stacks in Luna and have really taken a beating. You hate to see those stories because they're just everyday investors like you and me who are just trying to make good, trying to do something. Maybe took a little bit more of a chance than they perhaps ought to. But I really like to bring in the best possible person to talk to us about every situation, which is why I'm thrilled to have Ben Armstrong with me. He is the founder of Bitboy, of course, and he is the really rated the top crypto influencer by Reach, founder of Bitboy Crypto, High Throughput Productions, Hit Network. And he's going to come and talk to us about what is happening with our very active and interesting market right now. We live in some interesting times. So Ben will help come define that for us. Let me bring him on right now. I'm actually really excited about this one. I'm glad you all are joining me today. So Ben, how are you?
I'm doing very well. I mean, I think that last year in May when we got the large dip, it really sucker punched me. Sucker punched everybody. Right. We were prepared for this one, and so this one wasn't really a surprise. So I'm actually really excited about the opportunities that this drop in price is going to present.
Can you really prepare though? I mean, it has been the gift that hasn't stopped giving so far. Maybe it's just giving us a little bit too much of this, but this is all according to plan from your perspective, or all according to pattern, I guess.
Yeah, of course. We're really big on the Bitcoin cycles. The 4-year cycle, which is based on the Bitcoin halving, HALVING. If you're unfamiliar with that, that's the number one thing you need to research in crypto, in my opinion. It has been for years. We've repeated the same 4-year cycle since the creation of Bitcoin. It goes halving, 1.5 years of parabolic movement, 1 year dramatic drop, 1.5 years of slow upward movement, kind of trying to get back to the previous levels. And so far, that has not steered us wrong. A lot of people last year believe that, we're not ever going to get it. It's too far advanced. Things are different this time. I can point you to articles from 2012, 2016, 2014, 2018, where they all say the same thing. They all say it's different this time. There's this wrinkle, there's this. And so far it hasn't been different. So, until we see something different in the pattern of Bitcoin, there's been no reason to, think we're going to see otherwise. And that's why, we always encourage our audience to take profits if you're in the green. You should be taking profits if you're up on crypto trades. There's this idea it's always going to go up forever. And so far, over the long term, most of the major coins, along with Bitcoin, have followed that pattern of going up over time. But we don't know that for sure. It's an important, why it's very important to make sure you're picking winners.
Right. And you make a point about actually liquidating some of your profits. That seems like traditionally, isn't that discouraged? Don't we discourage our fellow people in this sphere from cashing out? You have to pay 40% to the U.S. government if you're in the U.S. and so forth. It seems like that's against the grain, but you think that people should regularly do that?
Absolutely. This idea that we're going to wake up one day and Bitcoin is going to be in full stream adoption and that we're just going to be, one Bitcoin equals one Bitcoin, it's far-fetched. We're not going to see that. Like, if you really want to get into the spirit of the libertarian movement that really started crypto and pushed it forward, if you want to go on that train of thought and that, crypto is more of a philosophy for you than an investment tactic, then sure, hodl, as we say, hodl forever. That's great. But if you're a person who's looking to change your financial outcome and your financial life, then taking profits is the way to go. You know, paying 40% on a trade that you're up, you know, 1,000% on is not that bad when it comes back to earth and you realize, okay, I would have rather paid the 40%. I'd have more money than I have now. And the way that Bitcoin works with these cycles is you're always able to reaccumulate, you know, at bottoms. There's going to be better opportunity. You know, I've always said hodling is a lazy strategy. It is a long-term strategy and it works if you've already got a lot of money. But if you're a person that's trying to go from paycheck to paycheck to financial freedom, then you're going to need to take those profits at the top and reinvest them at the bottom. At least approximately. We didn't take as many profits as we would have liked to have taken. We took enough. We took, you know, 7 figures worth of profits over the bull run, which has set us up. We've diversified those into real estate. We've diversified those into our 40,000 square foot studio we have here. We've done a lot with that, but we still look back in which we had taken more, and we took a lot. So you're never going to kick yourself for taking profits in a bull run.
Are we going to see, you know, what about laser eyes? What about all the fun and romanticism of 2021? Can you bring that back to us, Ben?
No, I hate to tell you, it's not coming back in the short term, but what I would tell you is that's great. This is such a good opportunity. The amount of shows and amount of interviews that I did last year with people that said we won't have another bear market, that's discouraging to the retail trader, because 70% of people who are in crypto came in during 2021. That means 70% of people that are in crypto are at a loss right now. So if you look at it, those people that came in and prices were to go up, that's great. But that means they didn't get great entry points. What we're seeing now is we are seeing great entry points for altcoins, and I think they're going to get a lot better too for most of the project. There is an argument. We're going to be doing a video on it later this week. It's called the false top theory, to where basically the November pump was kind of a dead cat bounce that went too far because of the ETF, and really the top was in April. There is some argument to that maybe we've bottomed, but most likely we're looking at October, November for a bottom and much better altcoin prices. Those are great opportunities for people that missed it. So, you know, I think about when I really came into crypto full on, which was 2017. You know, been in crypto since 2012, but really like went all in 2017. You know, I remember during the bear market of 2018, all the people that created their social media accounts and influencers and stuff during the 2017 bull run, it was like, once you went through the bear market, okay, now you've graduated. Like now you've graduated. And all those people that graduated in crypto, they're all crushing it now because we got great entries in 2018, 2019, early 2020. The class of 2020, the class of 2021, you're just now starting to get through your graduation. And when you look back in 3 or 4 years, these are people that people are going to look back on and say, oh, they got lucky. No. This is the hard time in crypto, but this is where the opportunity is.
So obviously you take based on historical data, you do a lot of trending of information and so forth, which is great. I saw that you were doing it on your stream a little bit earlier today. By the way, subscribe to Ben's channel, Bitboy Crypto, except I assume most of you probably already are. But if you aren't, please do. If not, subscribe to me. Go and subscribe to this channel too. Hit like and subscribe. But you know, you're talking about like where you see the bottom happening. You know, care to speculate? Allison asked it in the chat. You know, what kind of Bitcoin we looking at the bottom end of this?
Yeah, this is the not fun part of being a person who's been telling people to buy crypto for years and years, and it's been going up. Now that it's going down, we got to look at the downside, and it doesn't feel good to look. The numbers say, I'm just going to tell you what the history and the numbers say. The history and the numbers of the Bitcoin cycle say we are going to 10,300 by the end of November.
Right.
For me, I can't be intellectually honest with you and tell you I think it's going to go that low. Now, that doesn't mean it's not going to. The numbers say that it is. And so far in this cycle, we are exactly on track for an 85% pull down. Exactly on track for an 85% pull down. For me, we're also kind of at this corner of history where we've got something that's always done before, and then we have something that's never done. So Bitcoin has never gone below the previous 4-year cycle top, which 2017 would have been $20,000. It's never dipped below that. So if it goes below $20,000, you know, we're at a point of history that we've never seen before, and that'll kind of shake some things up. So, you know, to me, where I'm looking at where prices are going, I'm looking around the $20,000 number, somewhere between 20 and 24, I think is reasonable. But this is what I'll tell people. Trying to judge the exact bottom, that's not a very lucrative thing. Like, it's hard to find the exact bottom. You need to start looking at scaling in. And I think anything below $32,000 really is a great scalable point. If we were to pull up the chart from 2018 in the bear market, when basically from November to December, you had a giant U shape that appeared there, any price point within that giant U shape was a great entry. And I think that's the way people need to look at it. And plus, when you look at trying to find a much lower bottom, you don't need as much capital to make bigger gains, right? So if you're scaling in at 30,000, the bulk of your money should be scaling in between 20 and 30, and you need to leave some money on the side in case we do get that dramatic drop down to 10,000. Now you got a lot more bang for your buck down at that level. So we always suggest to people, not just diversify the coins you buy, but diversify your investing strategies as well, and your points of entry.
Right. Historical, there are certain things as you're crunching the numbers, although you have a very methodical approach to it. I love the use of historical data and so forth. All makes a lot of sense. But there are certain factors that just kind of come up as X factors. Putin's war against Ukraine, China, and it seems like everybody is kind of like jumped in to have an opinion during this particular time. Of course, we weren't shy about feeling good when things were really, really good last year, I suppose. So I guess we kind of have to expect this. We've got China saying, look, this is why we were correct in outlawing all crypto. We've got the SEC saying this is why you shouldn't invest in crypto. We've got like every pundit possible, from outside the crypto sphere coming and saying this stuff. It is a matter of sentiments as well as numbers, right? Value is in some ways an expression of staked belief. Of course, those of us who are, that's what the Bitcoin's supposed to be all about, right? Where do you think that leaves us? Like, first of all, this kind of swarm of naysaying and negativity. I guess that's to be expected. But are any of these things, like, we don't know how Ukraine's gonna pan out right now, or what that's gonna do to supply chains? How do we account for these things? How do you account for these things as you?
Yeah, well, I love the negativity. I think when you hear the negativity, this is more evidence of where we're at and the opportunity that exists. Is that when Bitcoin's at its peak, people are laughing at this stuff like, oh yeah, Bitcoin's a Ponzi. Look how high it is now. But now we're in the bear market. Everybody's like, Bitcoin's a Ponzi, and it's just like, it's so par for the course with what we've seen for these bear markets. And, it's hard for me to contain my excitement about where we're at right now. And I haven't felt like this in crypto since probably the DeFi summer of 2020. I really started feeling really great about where things were going. I haven't felt this great about things because, I've been through this so many times now. All of this is par for the course. It presents such big opportunities for people, but it also has pretty much, solidified my business strategy for another 4 years, because my business strategy is telling people about the Bitcoin cycles and how much they continue to work and how cyclical Bitcoin is and how you need to understand that Bitcoin halving is the number one catalyst for the Bitcoin price. It's not even arguable. And yet a lot of people in crypto don't even know what any of that stuff is. Well, I wasn't sure we were going to get another 4-year Bitcoin cycle. I am now positive we're getting another full Bitcoin cycle, and that's exciting, and that's where the opportunity comes in. I think when we don't have a massive pullback, that's when everybody's missed it. As long as we still have these big pullbacks, you still have the opportunity to get in and say that you were early in crypto. So I think that's something to definitely pay attention to. Now, to tackle these things individually that you bring up, I think that, Ukraine, how this shakes out, I think this is more a bigger conversation of the macroeconomical factors in play in the world right now. And that's why from my head, I say it looks like Bitcoin can go to 10,300. From my heart, I say it can't. Well, if all of a sudden NASDAQ breaks, the SPY spikes, we have gigantic supply chain issues. Now you can start to line all that up and say, okay, well, it does look like we're going down to those numbers, because I think that all of that stuff is definitely in play. I think that really this is the way that I do see things playing out. To honestly, there's a reason why we have locked on the end of November as probably the bottom, or probably when we see things turn. If you look back at 2014 and 2018, leading up to the midterm elections, we had a pump. And then after the midterm elections happened, you had the beginning of the end of the bear market, right? When it hit the lowest price between 3 and 5 weeks from both the midterm elections. You can kind of see this playing out now, right? You can see, if we stay economically where we're at, I don't think there's a question which side is probably going to walk away winning. It's not going to be the side in power now due to the economy. And if that's the case, there's been a lot more pressure on the bullishness from the Republican side than there has from the Democratic side. So whenever there is, and we try to stay politically agnostic, we don't really take a side, but we look at facts and where we're at right now in sentiment. And you can say this, there's definitely a case to be made that Bitcoin hates change. So when there's a change in leadership, there could be some issues, but then all of a sudden you have more bullish regulation than bearish regulation coming in and people talking about this. And then everybody's like, okay, this was a bottom. We think blockchain once again is in chic and we're going to be going positive with the regulation. The regulation is a good thing all the way around, in my opinion. I think that the stablecoin regulation we're going to be getting is, I think it's obvious where it's going, right? They want to get rid of stablecoin staking because this competes with the bond market. They do not want this. This was always going to happen. I think the algorithmic stable coins, I'm not going to say I think they need to go away because I'm a big fan of innovation, letting things run. We don't trust algorithmic stable coins. So any regulation that comes in on that side, I don't invest in them. So how am I going to tell other people to? So because that we expect that kind of regulation to come in, and we hope it's common sense. And so a lot of the regulation we're looking at, like I speak to lawmakers. Like this is something we're passionate about here on the channel, is changing things for blockchain. Right. And I think you'd be surprised how much more they know than you think that they know about stuff, especially on the state levels of a lot of these different, governments. Like federal government's a little mad, right? State government, we think they get a lot more things done there. So overall, I'm not scared off by the regulation. I think the midterms will be that shakeup, will lead to the final leg down. But look at that means you got between now and then to start scaling your buys and really thinking about what you want to get into. And this is not the time to be chasing 100x or 1000x coins. This is the time to really be putting money into what you think are the absolute winners, the proven winners, your chain links, your polygons, your Ethereums, your Cardanos. I mean, some people would say Cardano is unproven as well. But I do love Cardano. XRP, everybody, would pretty much agree at this point. It doesn't look good for the SEC. It looks much better for Ripple. So that's a coin, we'd be looking at. But, outside of that, you don't want to be getting outside the top 50 or top 100 on CoinMarketCap right now.
So I don't know, do you think that this is going to move forward? Are people going to use this as an opportunity to push forward regulation? I thought it was a little bit sus that they conducted 50 independent investigations, including $1 billion scam, just trying to take that little bit of salt and throw it on top of the wounds that space already experiencing. Like it seems like a PR-based attack in some ways to come out with that kind of anti-crypto rhetoric right now.
It absolutely is. It's the FUD cycle. Listen, where does all this stuff originate from? Like you can look at the government, it all originates from BlackRock and Vanguard. These are the two most evil companies in the whole world. They own a piece of every major company. They own a piece of Tesla. They own a piece of Twitter. They own a piece of Amazon. They own a piece of, like I said, almost every single company out there. These are the people that do not care if you have food on your table. They do not care. They only care about ROI for their investors. Guess what? They also owned parts of all the major media companies. Yeah. So what a coincidence. Yeah. They're trying to take advantage of this bear market. They're trying to push the sentiment down, release the fear, uncertainty, and doubt stories. That's why it's so random, right? How it always piles on top of each other very quickly. It's not random. It's not a coincidence. They know what they're doing, and they want, they basically sort everyone into two categories. You're either in dumb money or you're in smart money. Dumb money means retail investors. They do the same thing over and over again. The smart money, institutional money, people that move to a higher level. They want the dumb money to remain dumb money. That's what they want. It's your job to figure out a way to move from dumb money to smart money. And I think that it's times like this where you can see through the cycle of misinformation that they spit out that you can become the smart money.
And you know, you can see that battle playing out. Obviously, you know, a really striking example, of course, is it's not crypto. It's the whole GameStop thing. You've got people kind of moving collectively, you know, making a difference, setting an objective for themselves, and then working collectively to achieve that, not following the rules that smart money would have them follow. And they were, you know, more than a little bit resentful, as I recall, the hedge funds that literally got caught trying to short and then lost the opportunity to make billions of dollars. You know, it is an opportunity. Okay, I want to talk about algo backed stable coins. You know, there was kind of a stern warning from Buterin about this as well, that, like, you know, don't conflate algo backed coins with actually asset backed coins.
100%.
It was a fair point. You know, part of what strikes me out about it, although I wasn't holding in Luna or anything like that, is that frankly, Terra was a pretty impressive project a couple of months ago. You know, I did, for what it's worth, wince a little bit at the idea of, like, it had that kind of feeling of like secret sauce. Like, we're not going to divulge what the formula is, but trust that there is one, and it does fantastic things. So that seemed a little sketchy. You think that this is the end of an algo backed stablecoin? Is it going to hurt stablecoins long term?
Well, I'm not a fan of them. Like I said, I can only tell you what we do. And what we do is we do not put money in algorithmic stablecoins. There was a project that we once supported, Benchmark Protocol, and we have nothing bad to say about Benchmark Protocol. Like, it was fine. We worked with them back when we did sponsor videos, and, you know, had a good experience working with their team, and they seemed like they were knowing the way they were doing. We didn't make any money with it, you know, and we didn't make any money with Ampleforth. You know, we didn't make any money with reserve rights and their stablecoin. We just have not ever seen an elastic supply algorithmic stablecoin that we made money with. And so we're not ever going to push that. So until something comes out that's able to prove the model, it's just not something that we really support. And we know there are people out there that support it and try to make money with. I think when you're looking at Terra Luna, what you're really looking at is a project that was hype driven, a lot of hype, right? All of a sudden they have you know, Do Kwon becomes this giant influencer and people are looking up to him, with very hype driven. Terra Luna was based on this 18% staking on Anchor Protocol with USD. You take a stable coin, you make 18% of it. Right. What we have seen is proven with Wonderland and proven with, you know, Olympus DAO, proven now with, you know, Terra Luna. If it sounds unsustainable to this point, it has been unsustainable. 6 to 8%. Okay, maybe that's sustainable. We know treasury bonds, you can do 1 to 2%, 6 to 8%, not a huge stretch when you have someone who's controlling the supply. For stable coins, maybe that's a huge stretch. But the idea is, if it sounds too good to be true, so far it has proven to be true. That's why you don't need to be investing in meme coins. You need to be investing in things that actually have value. And when Terra Luna, when their protocol's number one value was providing a return to people outside of Bitcoin, we haven't seen that work with anything, right? Bitcoin's number one value is it appreciates in value, but is driven by extremely tight tokenomics that hit supply and demand principles dead on. We know how much there is. We know how it comes to circulation. We know the demand is high. We know the supply, the amount coming to the supply is lowering. We know there's 4.5 million Bitcoin that are missing, right? Because, you know, from Satoshi's wallet and other early wallets. So even the tokenomics that Bitcoin presents, it's actually even better than that, because so many have been lost forever because people lost private keys in the early days when Bitcoin was produced in a much higher number. So I think when you look at Terra Luna, this was never, now look, on my channel, we certainly covered Terra Luna. We covered Terra Luna as a coin that, you know, we covered it as our coin of the month a couple of months. That was more for trading purposes. Those did really well. Both of those months, it turned out to be, you know, one of the top performers. But we've never pushed Terra Protocol as one of our top platforms. I've never mentioned it in the breadth that I would mention Cardano, or I would mention Polkadot. Polkadot's one of, I like Polkadot pretty well. Solana, Ethereum, never mention it in there. When the number one value proposition is return on investment, you need to be careful. And anything that's an experiment, while you could make the argument all of crypto is really an experiment.
Sure.
When something is this big, of an experiment. You have to be careful and you have to diversify. If one coin collapsing is enough to destroy your portfolio, you're not doing it right.
Part of the thing with like the popularity, the heady, the enthusiasm. I appreciate the enthusiasm. People want to get excited about things, and I understand. Of course, the point is to make money. It just seems like people, in terms of doing the research, were looking at the numbers and not necessarily the projects in 2021. And it was okay to do in 2021, but maybe not this year. To be devil's advocate for a second here, though, we got this articles. We got Sam Bankman-Fried pointing out that Bitcoin not a payment network, environmental impact, doesn't scale. I mean, obviously I support Bitcoin, but he's making some valid points in terms of use cases. It's restricted, but yet it's kind of like it's the one blue chip. Well, I guess Ethereum might be the other one, of course, but I try to be a little skeptical, right? Because blue chip used to mean it holds value for 100 years. That's clearly not what it means in this particular case. What are your take on what's your take on those criticisms? Is Bitcoin limited just because of supply? First of all, because I don't think they accounted for it being as popular as it is.
Well, I agree with Sam Bankman-Fried on almost everything he said. I don't believe Bitcoin is a great payment network. I made a lot of fun of Jack Mallers, who runs Strike, which is, runs with the Bitcoin Lightning Network, that our big announcement that we got at the Bitcoin 2022 conference was, oh, you can buy a Coke at your gas station, but it takes 7 extra steps. So you can use your Lightning wallet. And it's like less than 5% of people in crypto even know what a Lightning wallet is.
Right.
Probably only 10% of the people that know what it is have one, right? This is not a big deal. Bitcoin is not an effective payment network. Right. It's too slow, okay? And people are not going to use it. Jack Maller's theory is, well, people hate credit card processing companies so much that they will use a Bitcoin network that takes 7 extra steps just to spite the banks. Now, I don't think you understand the sentiment of the world. People don't care about that. The only way that his idea of Lightning Network being effective as a payments network would be if retailers suddenly said, we're not going to take cash anymore. You have to send this on this network. That's the only way that it would happen. So Bitcoin is digital gold. Bitcoin is not a currency. That is the genesis of where Bitcoin has gone. It has gone from the original idea of Satoshi's vision, if you will, not to borrow the name of the coin, but Satoshi's vision was this would be a payments network. But I don't think that Satoshi anticipated crypto and blockchain in general getting as big and having as many competitors as it has. How could he? There had been no successful e-currencies at that point, and there were 4 or 5 iterations that had a lot of backing. But really, it was the Silk Road, in my opinion, that actually pushed Bitcoin to where it needed to be. Which Silk Road backing.
Sure. Yeah. Well, it's even like last year, supposedly 60% of transactions were black market or gray market transactions in terms of Bitcoin.
No, it's 0.1%.
It was 0.1%. Well, there was
it's 0.1%. It's gone down every year. And if you follow the latest numbers from 2020 to where we are today, and it continues dwindling in the same percentage, it should be 0.1%. I don't know where you're getting the 60% number. That's way too high.
It was very recent. I mean, honestly, especially when you're reading sources from outside the space, you get all sorts of contrary points of view. And it's it could be misleading. People cherry pick their figures around it. Hey, we are just about to jump on to Twitter Spaces. Ben has graciously agreed to join us on one there. So, you guys, if you are tuning in, please come and join us on Twitter Spaces so we can talk more about this. Ben, obviously you've got your channel. They can also find you. I believe your Twitter is Bitboy is underscore crypto. And absolutely, if you for some odd reason haven't already followed Ben, you absolutely should do that. Everyone, go ahead and do that. In the meantime, I'm gonna put the link to the Twitter Spaces here in the chat. And is there anything else you want to call our attention to, or generally, come where they should come find you, what they should be looking for?
Yeah, you should check out our bitlabacademy.com. This is where we have education courses for, everything from beginners to expert. Just go check that out. And then I'm really easy to find. You just search in Bitboy Crypto. I can't escape it. You'll find me everywhere you want to find me. Be careful of impersonators. I will never send you a direct message.
Oh yeah, the person that must drive you crazy. Everybody I'm connected with who, we'll get false, we'll get impersonators from everyone. I must drive you nuts.
I think I might have more impersonators than anybody on the planet other than Elon Musk. It's very frustrating, but it's one of the things that, maybe Elon Musk himself will be able to fix. So we'll see.
Well, you should. Yeah, you were rated the #1 influencer by Reach last year, and I think this year as well, if I'm not mistaken. But no, definitely, Ben is great content. Go ahead and follow him and come join us now. Let's go over, jump on Twitter Spaces. I want to ask you more about the educational part and the way you've built up this incredible reach. I really respect that. You're doing good educational content. Thank you so much for joining us today, Ben. I will see you in another minute. We'll actually talk. We'll be, so not see, but I'll connect with you in a minute. And thank you guys. We will. So everyone, thank you, Ben. Thank you everyone for joining us. Let me go ahead and catch up with you all once I start this Twitter Spaces. Please come and join us. Please have questions and so forth. We love to have them. Thanks, and we will talk to you soon on Friday. By the way, at 5 p.m., I'm going to have Polygon on, so we're going to be talking about that project as well. Very popular, so please do come and join us. Thanks, everyone. Take care. Please hit like and subscribe, as always. Talk to you soon. Bye.